What's up, guys? Mike here. I'm going to talk about Stoneco Q1 earnings. These were pretty nice earnings, I would say. I'm very happy with these results, and the company looks like it is just trucking along. So thesis is still intact with Stoneco. The huge expansion of margins continue on their big operating leverage, and massive customer number increases. And I think this company is worth $10 billion US right now, and it's trading at less than 4. Now, that's not investment advice. None of this is. This is just my opinion and talking about my view on the market. So, yep, if you lose money on something, don't blame me. I think it is trading at about 11 times, EV to forward pre-tax earnings. My view on pre-tax earnings from this year, and that's saying, oh, that's not that cheap. But if you factor in the growth rate, where revenues are growing about 25% year over year, that's the guidance for Q2, and profits are growing 16% on per quarter right now. So that's massive growth on the profit side. And so the PEG ratio here is insane if you use the earnings growth. If you use it on revenue growth, it's still good. It's still less than 0.5. So I think there's a lot of value here. And speaking of which, the stock actually just recently broke out above 12, which I saw as sort of major resistance, and it finally broke through. And so I added another 20% to my position. So this is easily my biggest position now. I expect it to hold over 12. It may not, depending on what the general market does, but I think that break might have been a prelude to a big move. Just my guess. But we don't bet on price action here. We bet on companies that are fantastic, and I think Stone is a fantastic company at this point. So the new CEO, Pedro Zinner, is in, Tiago is out. And he seems to be quite long-term focused. He was, there's a lot of focus on the goals here in this release and in the earnings call. And he even talked about developing 2030 goals. So that's great that he's able to, not able to, but he's looking that far out. So I think that's really fantastic. I do like the new format of the presentation better. It's very goals oriented. And, I don't really know what that's worth, but I appreciated this version of the presentation. I think that he said it well. If you haven't seen a Stoneco video, basically he said, we want to be the one-stop shop for our customers, right? We want to be able to offer, payments, software, and banking, full suite of banking products, right? So if they get that right, that's a pretty big moat. That's pretty hard to compete with when you're offering bits and pieces to merchants, right? Whereas if they go to Stone, they can get all their products in one place. Stone can offer some of them cheaper, just to keep the value proposition. And like if all your software needs and all your financial needs are all working together, that's a pretty good value proposition for a merchant, I think. So some of the stuff from this quarter is the margins are up again. These are continually moving up quickly. They're up at pre-tax margin is 11.9%, up from 10.2% last quarter and up from 3.3% a year ago. Now, I have said in the past, I think that they can hit 30% margins again. They have done that in the past for a couple of years when they had their credit product going. Credit product is back in the pipeline. They're testing it now, and it should start to ramp up later in the year if everything goes fine. So, the margin acceleration the margin improvement might accelerate. Yeah, that's right. Okay, so then one of the things they did talk about numerous times, each of the people who talked in the call, was cost discipline, right? And so this makes me think, yep, that the margins are very important to them. You can see they really have not moved much. Their cost profile has not moved much in a year or more. And so they're getting all these revenue gains. A lot of them are going to the bottom line. So So just imagine, let's say you get 25% growth this year and not much cost increase. You can do your own math there, but that would be a very big profitability expansion. And on top of that, if the central bank decides to cut interest rates, then their financial expenses, which I think is their biggest line item on the cost side, will actually drop. So that's going to come down to Lula and what he does. Well, no, it's not actually. I mean, the central bank's supposed to be independent. Not that I believe that, because the president appoints the head of the central bank. And that appears to be what's happening. Lula's appointing his own guy. And he has been vocal that he wants the interest rates down. Like, they have these very high interest rates, and inflation is, I think, 8 or 9% below the inflation rate or the interest rate, which is, I mean, that's typically a huge gap that's unnecessary. And Lula has been sort of saying this over and over again. So now he's got his guy. I would expect that interest rates are going to come down unless we see a big spike in inflation. Who knows, though? This is politics. Nobody knows what they're actually going to do. But at this point, that's what it looks like. So the outlook, if we look at the outlook for the next quarter, they're saying, $375 million in pre-tax profit. They're always lowball. The last one was beat by $62 million, I think. So if we say, okay, they're probably gonna do 400, maybe 425 in terms of profitability. Like, I would say that's 20-25% profitability improvement quarter over quarter, right? And then they could be at 1.5 to 2 billion in EBT this year, and that would equate to about 275 to 400 million US dollars. So then apply your own multiple to that. That's and then we can take it from there. The banking side, this is a big win. They had 80% new clients in this quarter alone, and now they're up to 1.25 million. Most of those are micro clients. So they developed a new product called Super Conta Tone, and that's aimed at the micro merchants. And so this is, a lot of these ads are from that cohort, which means that the actual average revenue per client went down and the deposits didn't move a lot. So lots of new clients, not a huge amount on the sort of financial side, but I think that sets them up well, because a lot of these micro clients will grow. They'll need different products. They'll need software at some point and all that kind of stuff. So this is just sort of entrenching more people into the ecosystem. And so on the banking side, I actually think if we look back at this stock and look forward a few years, this might actually turn into a bank stock, whereas their payments side might actually, payments and software might be the minority at some point. They are working, like I said, they're working on their credit product, which is great. That could be huge. They're adding debit cards. They're going to add credit cards and a full suite of other banking offerings. So that's one of the big upsides. I don't think that they've done much on the banking side yet. It's not a huge piece of the pie, but I think it could be. What am I looking at here? Oh, okay. So let's just talk growth, right? They added 231 new active clients to 2.76 million. That is still really fast growth on the client growth side. They're saying they're growing TPV at 2 times the competition, which, if true, I mean, maybe they doctor the numbers, but I tend to believe them. So that means they're taking market share, or they're increasing their market share. They also said they had lower churn, and that's a direct result of the expanded product offering. So the more products they have, the less likely people are to leave, because it's more complicated to move all your business away from various software products, inventory and payroll and all that stuff, and payments, if you're all with one customer. And I think this lower churn, this is maybe this was a small bit in the in the earnings call, but I think it's a big chunk, because this shows that they're maybe a moat developing. The moat theory might be playing out now, and that's what we want. Okay, so software. This is the weak point. This is weaker than expected. It was far below their goals that they set last year. They spent a lot of time talking about this, but personally, I'm not that concerned. I don't think this is a big part of the upside of this thesis. For me, software is more of just a I don't know what the word is, but it's one of the things that keeps the customers hooked in. So as long as some of them are using it and they're expanding at an okay rate, like 10%, that's totally fine. I don't expect a huge amount of the net profit to be generated from these products. What else? So a little bit more on credit. They're now talking about it more openly. It's finally on the slides. They're talking about their intention to ramp up later in the year. They say they have more safeguards. They've said this a few times in the past. They're getting personal guarantees from the merchants, which they didn't have before. They were sort of unprotected the last time they did credit and ended up taking a huge hit on it based on partially their lax policies and partially because the government changed some of the rules on them. And that's why they ended up having to pull the credit product after some losses. And now they have a head of credit now. They have a better sort of management team behind it. And I think this is the real go at credit. And also another way to look at credit here, I think if you just take the payments and software business, the company's undervalued based on just that part of the business, right? That's the numbers we're seeing now. That's the growth rates we're seeing. That's the margin improvement. And if you add credit on top of that and they start getting some real loans outstanding on the credit side, the stock is potentially way undervalued at this point. It just depends on how that rolls out and how big it gets. On the risk side, probably everybody saw, but WhatsApp is starting to take payments in Brazil now. It's one of their early stage countries they're using, and I think this can be pretty attractive to some of the small and micro merchants. And because everyone's using WhatsApp anyway, I actually don't know how it works, but I would imagine that Facebook's going to make it, Meta is going to make it pretty easy to use. Now, I'm not as worried about the bigger customers because they're going to need more of Stone's products, and just pulling the payments bit out might actually create more of a headache for some of the multi-product users. But it is something to keep an eye on. How big is WhatsApp going to get with their payments? Worth keeping an eye on. And what else? Outlook, like I said, $375 million in pre-tax profit, about 2.9 billion in revenue. So based on their underperforming history, let's say it's closer to 3 billion, and maybe over 400 million in profit before tax. He did say that's the floor. This is the absolute minimum. And so I think those are phenomenal numbers to begin with. Even if they hit those targets, that's still great. So nothing. I don't see any real red flags here. I think this is a really encouraging quarter to me. I'm happy I added to the position on the breakout, and I think that maybe the pullback after earnings. That's just. I mean, anybody who's followed the stock for a bit, it's just like traders run it up into earnings or after or before, and then eventually it comes down. Buy the rumors, sell the news kind of idea. I wouldn't read too much into it. I'm just going to look for it to hold above 12 and then maybe resume off there. Yeah, I think that's it for now. Thanks, guys. I know I missed quarter four, but hopefully this is quarter four was fine. It was par for the course. Quarter one looked great to me. And yeah, thanks for watching. I'll catch you in the next video.